Welcome to this month's Economic Update. I'm Sinead Rafferty, Portfolio Specialist at NAB Asset Management, and I'm joined by our Senior Economist Bob Kinane. Welcome, Bob.
Thanks, Sinead.
Bob, in the month of May we saw US equity markets perform quite well, but other markets didn't fare quite so well. Can you talk us through what occurred?
Yes, so US shares performed strongly. So Wall Street was up 2.8% for May, and that's really driven by the strong corporate profit performance, the corporate tax cuts, a very solid US economy, strong jobs growth, unemployment rate below 4%. Against that, and a source of weakness was European share markets, and they fell about minus 3.6% for May. And there are concerns about political risks, in particular Italy and Spain. So we've got a new coalition government in Italy, and in Spain we saw the departure of the Prime Minister.
And in Italy there was a lot of political turmoil. What was the impact on markets?
Well, the impact was that it's a concern for Europe itself, because Italy's new government is proposing some very radical budget and immigration proposals that are contrary to what Europe has broadly agreed to. So Italy is now perceived as a threat to the European monetary system, potentially a breakup of the European monetary system. So from the point of view of investors, they're concerned about that political risk element.
And you mentioned the US unemployment figures down at levels that we haven't seen since 1969. What is the implications on that for interest rates and inflation in the US?
Well, because we've had such strong jobs growth in America, labour market is performing well, and with that, employees now have more bargaining power. So they can push for higher wages, and with higher wages, we have greater inflation risks. So that will bring forward, potentially, the Federal Reserve, the central bank, raising interest rates. Eventually this may be a concern for Wall Street, but it does show in the immediate term that the American economy is doing particularly well.
Okay. One of the things that could derail that is the trade wars that we've seen become more prominent again recently. What's the latest on that?
Well, the latest is that the Trump administration is going to impose a 25% tariff on steel imports and a 10% tariff on aluminium imports. And this is particularly concerning for its trading partners, notably Canada, Mexico and Europe. So potentially we have a trade war that damages economic activity in these countries that export to America. But it also is a concern for America because higher tariffs mean higher prices, higher inflation, therefore higher interest rates. So this is a concern globally. It's not restricted to America.
And what about the Australian market? How's that performed?
The Australian market did reasonably well in May. It returned plus 1.2% in terms of performance. However, there's very mixed economic data in Australia at the moment. What we're seeing in terms of the labour market, we're generating solid jobs growth. However, our unemployment rate remains stable at 5.6%. And we do have some concerns about the consumer. So what we're seeing in terms of retail spending is very subdued. Also, consumer sentiment is very sedate. So that leaves the Reserve Bank very much on hold, keeping interest rates steady at 1.5%.
Thanks for your time, Bob. And thank you for joining us. If you'd like further information, it's available on the website where you launched this video.